I'm going to talk about dividends using the stock market example from your textbook. This company has declared a dividend on October 31. It's a 5-cent dividend. At the time it makes the announcement, they refer to this as the declaration date, which is October 31. It has an obligation. So they have to credit dividends payable and debit dividends. Now, as far as the shareholders that are to receive the dividends, it's whoever holds the shares as of November 1. That's referred to as the date of record. There's no entry made on that date. It's just that's who will get the 5-cent dividend. Then this dividend payable will actually get paid in the next accounting period on November 5th. Now, how do we get the amount? Well, the amount is the 5-cent dividend times the number of shares outstanding. Now, here's the thing that you have to be careful about is they have issued, I'm going up to this entry here where they issued 10,000 more shares. They had original shares to the owners of 20,000, so at the point of this issuance, they had 30,000 shares issued. However, in the very next entry, they bought 3,000 of their own shares back. So the number of shares outstanding now, after this entry, is not 30, but 30 minus the 3, or 27,000. So if we look here now, is the entry, it's your 5 cents a share times 27,000 shares. And that gets you, excuse me, that gets you the 1,350. So when you record that or post it to your ledger, the debit is to dividends, 1,350. The credit is not to cash, not until the next accounting period. It's dividends payable. How does it look on the financials? As far as the statement of shareholders' equity, again, dividends are not an expense. Here you can see the dividends. It's part of the retained earnings, the good old beginning retained earnings, plus your net income, which is right from your income statement, minus these dividends. Now, as far as how does that look on your statement of cash flows, again, any money to or from owners is under financing, and there is none at this point. The reason being is, remember, the entry was to dividends payable. Next month in November, you will see the cash payment under financing. Again, no cash because under current liabilities, you'll see that dividends payable. And that's how that gets recorded.